Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel where we do the top-down analysis of different financial securities. And today we're going to be looking at the Deriv Synthetic Index Volatility 25-1S Index. And as you all know, I do my top-down analysis using pure price action trading strategy, and I'm currently on the monthly time frame of this particular index. And on the monthly time frame, what we basically try to do is to get our key zones as well as to predict our possible direction of the market. In other words, we try to get our directional bias from the monthly time frame. So from the horizontal bars that you're seeing on my chart, I already have my key zones mapped out so as to make this video as short as possible. Now, the next thing will be to get our directional bias. From the chart, we can see that Volatility 25-1S has printed out a beautiful uptrending market. Now, how do I mean? We can see that immediately it broke out of this range. The market gave us a high, a higher low, a higher high, higher low, higher high. It tried to do like a double top here, but ended up giving us a higher low, a higher high, higher low, higher high. So if we go to the line graph, you can see that it is much more clearer. So the question is, what's our directional bias? So after giving us the most recent higher high, the presence of this red candle saw sellers pushing price downwards by way of what? A retracement. So the question would now be, do we think price has retraced enough? Because if I zoom in for us to see much clearer, we can see that there's buyers are already pushing the price up again. So the question would now be, has price retraced enough for it to start going upwards? And then for us to answer that question, there'll be only one way to know. First, let me include my trend line here because I love this beautiful trend that the market has printed out. And then the next thing would now be for me to use the Fibonacci retracement to see if price has retraced enough for us to believe that it's going to continue in its upward direction. For us to see that if it's going to continue in its upward direction. So if I place my Fib2 here, there's what I call the Fibonacci retracement to golden zone. So I'll map that out, which is a zone between the 50% and 61.8%. And from what we can see that the rejection of price even on the monthly time frame started from price coming into this fib zone. So that means my directional bias as it is upward. So I'm going to be looking for buying opportunities. So the next thing would be to go to the weekly time frame to see if everything that we've observed on the monthly time frame aligns. So on the weekly time frame, we can see that excuse me, everything is still in place. Now, how do I mean? Now we're starting to see the presence of buyers as against the mere rejection we saw on the monthly time frame. We can still see the structure of the market: higher high, higher low, higher high, higher low, higher high. So this was the push down, the retracement of the market, and we can see that buyers are already coming into the market. So that means we're clearly on track. So the next thing would be to go to the daily time frame to see what the index has for us. Now on the daily time frame, we can see that buyers have tried to reject price at this particular zone. So for 1, 2, 3, 4, 5, 6 days now, buyers have been pushing price upward. So that now brings us to the question that I always like asking on the daily time frame, which I call the tradable time frame, which is, how do we take advantage of this setup? Another thing that we can even observe on the daily time frame is this inverse head and shoulder pattern here. Now, how do I mean? This would be the head, the left shoulder, and of course this area would be the right shoulder. Now, what am I trying to say? If we look at this alongside the structure that we already have forming here and this rejection, you can see that our Fibonacci retracement golden zone, which we've drawn independently from the monthly time frame, is coinciding with the neckline of the head and inverse head and shoulder pattern that is drawn here on the what on the daily time frame. So this should give us extra confidence that we're clearly on the right track. So the next thing to do is, how do we take advantage of this? My entry time frame starts from the H4 time frame. So because we're already seeing the presence of buyers by way of rejection on this and in this golden zone, then we can go to the H4 time frame to see if we can get possible entry. Now, the first method I always try to use in entering taking trade is the counter trend line mechanism. So if I take my trend line, my counter trend line, you can see that the market has been giving us lower lows and lower highs by way of what? Its retracement downwards. And at some point, we can see that the counter trend line guiding these lower lows and lower highs was broken. So when this happened, we had like a high, price came back down to give us a higher low, but instead of continuing to give us a new high so that we know that the uptrend has started, the price was pushed back down. But now we can see something here that buyers are still trying to push price upwards. So in all of this, the question would now be, what will I see that will give me enough confidence to take my trade here? So that would be this high is taken out completely. We can see that buyers are already pushing upward. So because for every time price came to this level, it was rejected. So we have like a strong supply zone here, or rather a resistance zone. Let me change the color of this to something else. So we had like a resistance, we have like a resistance zone here. So all I need to do now to start um, entering or taking entries, buy entries for those particular trade, would be to wait for price to close fully above the zone and then wait for a retracement. The retracement would probably be back into the zone, and then I can start taking my buy trades. Then you can refine this in the much lower time frame, like the H1 time frame. So if we even go to the H1 time frame to see what's happening, you can see that that's exactly what's going on there. Now, why do I say refine from the H1 time frame? Now, this is resistance zone. We can see that price is trying to close above this area. So once price is able to conveniently close above this resistance zone, and price comes back into this area, probably to this order block here, and then we can start with buying our trade, because then we'll be confident enough that the uptrend has fully started. So for those of us that trade Deriv synthetic indices, especially for those of us that trade volatility 25-1S, this is my take on this particular index. So like I always say, you can compare this with your own analysis and drop your take in the comment section below, whether you agree with this analysis or not. Also, if you are coming across this channel for the first time and you believe that this way of analyzing the market has been of any help to you, do well to subscribe, like, and share for others to gain as well. This is a trading academy, and for the month of November and December, we're having a 50% discount for our mentorship classes. So if you're interested, you can reach out to me via the link on my YouTube bio. So do enjoy the rest of your trading day, and cheers.